Bigger child tax credit in 2025. A budget boost for families. On July 4th, the One Big Beautiful Bill Act became law and changed family taxes overnight. It lifts the child tax credit from $2,000 to $2,200 for every child under 17 starting this tax year. Parents who file next spring will feel that jump in their refund or in a smaller balance owed. The income limits stay the same, so most middle-class families who qualified before still qualify now. The law also raises the part that can be sent back as cash. Up to $1,700 of the credit is now refundable even if a family owes no income tax. For moms and dads with very low income, this extra cash can cover rent, diapers, or food when budgets get tight. The refundable cap will adjust for inflation each year after 2025, so the benefit keeps pace with rising prices. Picture Maya and Omar with 2 kids in a small apartment. Last spring they got $4,000 in credits, and next spring they will get $4,400. That extra $400 covers a month of preschool tuition or half a new washing machine. For many families, the raise will feel like finding money hidden in the couch, but on a much bigger scale. The refund boost matters even more. Last year Maya and Omar owed little income tax, so much of their credit went unused. With the higher refundable limit, they can now receive $3,400 in cash instead of $2,800, giving them $600 extra for groceries or a car repair. Lawmakers moved now because families still feel the squeeze from higher food costs, rising childcare fees, and pricey extracurriculars. Surveys showed parents using credit cards for sports gear and summer camps. Officials argued that a bigger tax credit would help more than a one-time rebate check. They framed the change as a lasting fix instead of a short patch. The act keeps the higher income phase-out limits that began in 2018. Single parents start to lose the credit after $200,000, and married couples after $400,000. Most households still receive the full amount. Parents often ask how to claim the credit, but nothing changes about the form. You still file Schedule 8812 with each child's social security number and age. The IRS plans to update its online tools in January so families can preview their refund. Tax sites and paid preparers will update software too. If you use a free file service, the screens will look familiar, only the math will land in your favor. The credit is not paid monthly like the temporary advance in 2021. All the money comes at tax time unless Congress passes a separate bill. Parents should plan for a bigger spring lump sum. Financial coaches say the new credit can be a game changer if you give every dollar a job before it arrives. Write your priorities now so the refund is not eaten by impulse buys. Some families follow the envelope method that is popular on social media. They label one envelope emergency fund, another school clothes, and a third sports fees. When the refund hits, money goes straight into each envelope or digital bucket. Others choose the snowball strategy for debt. They throw the extra credit at their smallest credit card balance first, then roll the freed-up payment into the next debt. Quick wins keep motivation high and stop parents from sliding back into high-interest debt. For households living paycheck to paycheck, the credit can fill urgent gaps. A family might use half for late utility bills and half for kids' winter coats. Social workers note that a sudden cash infusion often lowers stress at home. Less stress means calmer parents, more patient conversations, and better emotional health for children. Homeschool families can stretch the refund into curriculum kits or a second-hand laptop. With tech prices climbing, an extra $200 per child can cover a math program subscription or science lab supplies. Parents of special needs children face larger bills for therapy and adaptive gear. An extra $200 per child and the larger refund portion can cover a month of speech sessions or half the cost of a weighted blanket. Advocates say the change recognizes unique costs. Military families who move often value a credit that follows them anywhere. Even when income fluctuates, the refund can bridge gaps in childcare or fund travel to visit relatives. Single parents gain breathing room too. A parent earning $40,000 with 2 kids can use the new credit for tutoring or summer camp. Critics argue the change still leaves out some families with very low wages. They push for making the entire credit refundable. Supporters call the higher refundable cap a step forward that could grow later. Economists predict the boost will put about $14 billion extra into local economies. When parents spend on shoes, school lunches, and doctor visits, small businesses see more sales. A bump in family spending late winter could soften a retail slowdown. Analysts say the credit is too small to raise prices nationally. Yet it gives individual families a buffer against price hikes in essentials. Because the credit is indexed for inflation starting 2026, it will not lose value as costs climb. Parents should watch for IRS guidance on babies born late in the year. A child born on December 31st still counts for the full credit if they have a Social Security number by the filing deadline. Hospitals usually file quickly, but parents can request an expedited card if needed. Foster and adoptive parents must meet the same rules as before. Grandparents raising grandchildren can also claim the credit if the kids live with them most of the year. College-bound teens no longer qualify once they turn 17. But the other dependent credit at $500 remains. Parents can use the child credit for early college savings while kids are younger. Store birth certificates and proof of residency in a safe place. Quick access prevents refund delays if the IRS asks for more information. Enable IRS identity protection pins for every qualifying child. The pin changes each year and blocks fraudulent returns. Check your withholding on the new W-4 form. Counting the larger credit may let you reduce withholding and raise take-home pay, but avoid dropping too low. The IRS tax withholding estimator updates in late summer. Community centers and libraries plan free workshops on the new credit starting in September. Parents can learn filing basics, budgeting tips, and debt payoff plans in one session. Childcare is often provided, so bring the kids and a notebook. Nonprofits urge families to split the refund into needs, wants, and future, putting half toward needs, a quarter toward fun, and a quarter toward savings balances security and joy. Credit union advisors suggest opening a high-yield savings account with part of the credit. Even 3% interest compounds nicely on $1,500. Some parents will invest part of the refund in a new government account for newborns. Each baby born between 2025 and 2028 gets $1,000 seeded by the Treasury. Families living abroad but paying U.S. taxes can still claim the credit, but special rules apply. Military families on base overseas usually face no limit. Financial planners recommend a separate checking subaccount labeled Kid Credit. Naming the account creates a mental firewall against random spending. Avoid high-interest refund anticipation loans. Free IRS direct deposit arrives in as little as 10 days if you e-file early. Parents who receive public benefits should check how the refund affects eligibility. Many states exclude tax refunds from income if spent within 90 days. When the refund hits, involve older kids in budget talks. Teaching money choices now builds strong habits later. Schools may see a rise in field trip payments and lunch account deposits after tax season. Districts often plan fundraisers around that time. Child advocates hope the credit lowers child poverty rates, which rose after temporary pandemic programs expired. Early estimates suggest 250,000 fewer children may fall below the poverty line this year. Parents who plan ahead will feel the biggest impact. Start by listing goals for debt, emergency funds, experiences, and growth. Allocate credit dollars to each goal before the money arrives, and you will see real change instead of wondering where it went. Money itself is neutral. The power lies in the plan behind it. A clear plan turns a new tax rule into a better life for your kids. Takeaway: a bigger child tax credit is more than a line on a form. It is a fresh chance to build family security and joy today.